Okay, so thank you. I hope that everybody is doing well since we last met up on 28th of July. So that's about 1 month. And you could see that during that 1 month, a lot of things has happened on the stock market, particularly the US market and the China market. So yeah, so it's like been quite volatile, and I was like, I don't know what is keeping you busy, but watching the market and also monitoring my robot, all right, has been keeping me busy. So the robot, 2 weeks ago, I just launched the robot to 20 people. And this robot is this round, all right, it's just for testing, all right, like a load test, make sure that everything is okay, all right, before I start opening to more people. And I think the most of all, besides technical problem, I want to make sure that everybody is making money. All right. Don't want to. I mean, the last thing I want to see is people losing money. People under me losing money. I become very sad, very troubled. When I hear people losing money, right? Yeah, I become sad and troubled. Even when recently I learned about one of my students, had terminal illness, and I was like troubled. And I went to visit her, intro her to some of the herbs I was taking and all that. Yeah, so I think you guys are, especially those of you who have followed me for a long time, I think you are just part of the family that I'm very concerned about, and I don't want you to lose money. All right, so let's just so today's session, right, it's only me, all right, and you and Juren. So Juren is with me, and our usual guest star Marcus, all right, of SocGen, is not here today. And because I'm not sure whether I should announce this, but I think maybe it's private. So by the way, he's on leave for a very big occasion. Okay, so I leave it to him to tell you guys. But so this guy, yeah, so he's not with us. But nevertheless, if you have any question on DLC, all right, if you're new to DLC and you have any question to DLC, please, you can still put on the chat, all right? And Juren will try to answer your question as best as he can, okay? All right, so without further ado, let's press on into today's topic. Okay, so the usual disclaimer, whatever I'm going to present today is my opinion. There is no inducement to trade. It is only for educational purposes only. And so, right, I hope that, you guys have, I'm not sure how many of you got have since the last DLC and all the calls that was presented, all right? I'm not sure whether you really follow them or you know what are the major calls, like, for example, where Dow Jones is going to peak, where it's going to rebound, where S&P going to peak, going to rebound, that kind of thing, all right? So I'm not sure if anybody is following it. So if you are following it, right, it will be good because I always tell you guys that this thing is my presentation is like a Korean drama series. You just keep carry on and on every month, right? I come back and I report to you, the prediction and what has happened. All right. So if you are aware and have been following and our calls, can you just type on the chat yes, so that I know that somebody is following these things closely and my effort is not wasted. Okay, if you are following, just say yes. So I want to see how many people say yes here, and then you are following. So yeah, I just want to know that whatever I'm doing is benefiting some people. Yeah. Okay. Okay, so a lot of people are following this closely, and I am very happy. Okay, thank you very much. Yeah, thank you very much. So so what we do is we do our usual recap as to what was spoken on 28th of July and what has happened in the last 1 month. Okay. All right, so I talk about stocks. Okay, so let's start with stocks. I talk about PetroChina, and I said that PetroChina could just trade within 532 and 595. And the reason why, right? Although I'm bullish on PetroChina, I'm bullish on the oil stock PetroChina. I'm bullish on the China Mobile, but in the last meeting, I did not ask you to buy it. I only say you should just buy at the support. All right, don't chase it. Okay, so I said, okay, PetroChina could hit 595. All right, and support it's 532, and between 532 and 95 will be a good buy and sell level. Okay, and so what happens is it happens. So these are our levels. All right, so 595 hit. So on 28th of July, all right, after the GLC talk, all right, it went to 446, and it went, and then it turned around to hit 595, which is the target, which means you should be selling. All right, you should buy the short DLC, and then it came back down to 547, and it has rebounded now. All right, it's rebounded now to 562. So by and large, although it's not so exciting, right, but it actually preserves your capital and gives you dividend. All right, so that's very important. All right, so so the prediction was good, and capital preservation. Because these are the strong stocks. All right, the strong will continue to remain strong, which means, right, when we talk about strong stock in China, right, and the reason why strong stock are not like charging ahead like Nvidia in US and all that is because the main index, all right, main Chinese index is going down. So if you have the main index going down, even if you have stocks like this China Mobile and PetroChina just hanging on to their gains and not moving, that is technically already a sign of strength and capital preservation. So in scenario like that, right, in very dire situation, right, you just have to these couple of stocks, right, you just have to buy them on extreme levels, like good support level, and normally you can make money out of it, and it's like you can see it's quite safe no matter how much Hang Seng crash, right? These stocks are still just staying at the same price, just hovering within the range. Okay, so our prediction was consolidation between 62 and 66, and that's where you get. All right, so it sort of rebounded and to 67.25, a little bit above my target, and then it went down to 63.40, and now it's back up to 66.10. All right, so always buy stocks like that at the support. All right, so BYD, it's my perennial favorite and still my favorite stock, and And I think, after this weakness in Hang Seng, you could see BYD higher priced. So back then, BYD was doing at 270, all right, on 28 July, and we were talking about a target of 294. It did not hit 294. It went to 280, and then came all the way down to 314. And my buy target was at 237, and now it has since rebounded to 248. Okay, so Tencent, I was saying that if Tencent ever break out of this, all right, of this downtrend line, all right, we could see 376. Back then it was doing at 350, and of course, right, it did not break out of the downtrend line, so it came down, all right, to the 314 level, and now it's rebounded to 325. So Tencent is like not very strong, right? As compared to Alibaba, it's not very strong. So Alibaba, we're talking about Alibaba heading to a target of like 101 in the short term, okay? And when we were doing that session, we were doing at 94, and so we had like very close to it, the target. So we hit 100, and then it came off to 85 and had rebounded. Meituan, okay, so talk about target of 148, okay, and it hits 150, okay, then came back down to 125. So among the three, this is the one of the weakest stock, all right? So I have been shorting this one, all right? So every time Meituan go up, right, on strength, right, I try to do some shorting because it's very, very weak stock. Okay, and Hang Seng, right? We talk about this trade plan. So what I want you to be watching is this trade plan, all right? So this trade plan, right, work wonders. Okay, it's like the prices, right, is really moving in lockstep with this trade plan. So if you can put this trade plan, it's not difficult. If you can put this trade plan, right, on your on the platform, all right, I think you can follow the levels, right? I think you can make quite a bit of money. So so what happened was that if you have been following, that's why I asked whether you've been following. So if you've been following, actually the prices actually touched the trend line, and that was the peak. After it touched the trend line, right, you start like coming down. All right, so that's where you saw it. So 31st August is where you see that. You see that Hang Seng, right, came very close to the trend line, all right, and then it went down. So when it went down, right, all right, the question is, when Hang Seng take a dip now, the question now is where we go, all right, where we go. So it went exactly to this, this line here. So I remember on the Facebook, I said, those of you who are following me today, I want to share my secret to how I find tops and bottoms. So the top was here and the bottom was here, and the line was all drawn, the target prices all drawn. So now Hang Seng is at sort of climb to at the middle range. So the only two things that happen to Hang Seng, all right, if it can turn and hits 19,100, and if it's 19,100, remember this number, all right, if it's 19,100, it may pull off, all right, and that could be the short-term peak. But if it doesn't, right, it will go and hit 17,500, and if it breaks 17,500, you go to 16,800. So 16,800 or roundabout, these are all ballpark figures, all right, they're not exact. So this like 16,800, right? If you can get it at 16,800, right, there's a good chance to make very, very good money, all right? Because at every swing point along this line, all right, you make like 5-10%, all right? Yeah, so it's good money, all right? So you have to be buying at, so don't buy when it's no 3, no 4, all right? Buy at inflection point, all right? So always remember the numbers I give you, all right? Because those are inflection points, okay? So, if it hits 19,900, wow, conviction sell, all right? That's even better, Okay, but I doubt, all right, that it will hit 19,900 because of the macro weakness or macro headwinds in the Chinese market. All right, so you went, all right. So the last time, all right, we called buy. So you went to hit the trend line, came down, and now it's rebounded. Okay, so I also talk about Hang Seng Tech Index target 4,600. Okay, so it hits there exactly at 4,600, and then it came back down, and now it's gone up. Okay, Straits Time was spot on, and I said, okay, you know, Straits Time 3385. It hits 3385, and then it came collapsing. You see that 3385, and then it collapsed all the way right there at the top. All right, Straits Time. So that was spot on, and you caught that 3385, you would have made like 250 points, and that's quite a lot, right, for DLC for Straits Time. All right, so and then you know now it's gone up again. DBS, we talked about DBS peaking, all right, at 35, and it hits 35, and then you see that it hits 34.55, and then came crashing down. All right, so I was like bearish on DBS. And UOB, we talk about UOB hitting the target at $30. It hits the target at $30, and from $30, it came crashing all the way to 27.50. All right, so that is another like 10% gain. Okay, so now we finish our recap. I hope you guys benefited. Okay, so let's you know, like if you missed the last market outlook, stock pick, and the levels, right? So today we have some more for you, okay? And I hope you can benefit from this session today. Okay, so if you have been watching my this rebasing chart, right? You have been watching my rebasing chart. You like every month, right? It seems that the top performer, right, seems to be the same. Okay, the one that is strong will always stay on top. Okay, so you just need to focus on the one that is strong until the trend changes, until the one that is strong start coming down, all right, and dipping below. Okay, so so what you have here, right, it's you could see one stock dipping below, all right, and I think this is I think it's BYD. All right, it actually dips, all right, below, and it's turning up again. So it's like so anything that like dips below, all right, its usual position, you know, we need to be watching it. But otherwise, okay, if you have to be a buyer or bullish, all right, you want to be looking at BYD Electronics, all right. It has been the market leader for the last couple of months, okay, followed by PetroChina, sorry, so PetroChina, followed by BYD Electronics, followed by China Mobile, followed by BYD. Okay, so this is the only 4 stocks in China, DLC, that you need to be focused on, all right, if you want to be on the long side. If you want to be a short side, Meituan, Wuxi, JD.com, all right, these 3. Top 3, all right, top 4, or maybe top 4, maybe quite so, okay? So that is the bottom 4 and top 4. In fact, you can, I mean, if you even want to do it, you can like buy the long DLC on PetroChina, buy the short DLC on Meituan or JD.com. All right, so you can like, you know, even things off. And I think by and large, you know, you would have made the differential, right? The differential would have been like positive. Okay, so so the last DLC meeting, I was like showing you a very depressing macros on China. Okay, and I was not wrong, because the macros in the last 1 month continue to deteriorate. All right, so I'm going to just continue to show you, you know, all these very dire, you know, picture or macro data coming out from China. Okay, so all right, very quickly, I don't want to waste everybody's time. I'm going to like, you know, flash it very quickly. So China PMI at 43. All right, 4th consecutive month of drop expectation. All right, so it rise from 4 49.3 in July versus 49.2. The China factory fell back into contraction, which is below 50 level. All right. So the Caixin Services PMI rose to 54.1 in July, marking expansion. So that's only the bright spot. All right. Services sector normally the bright spot. All right. So that's quite normal. All right. But the China report double-digit plunge. All right. So this is very serious. All right. The plunge is so serious. All right. That you know, it's going to not only affect China, but it probably would ripple around the world. Okay, so China report double-digit plunge in July, export and import missing expectation. Okay, so so the drop, all right, you know, it points to falling demand overseas, both overseas and China. So the demand has fell, all right, on both sides, all right. So not only on one side, which means, right, you know, it's going to be very hard to recover, right? Because both sides are weak. Okay, so and you can see all this, you know, downturn, all right, in the deflation in China. So while while in the West is a different picture, you have inflation, you know, out of control, but in China they are experiencing deflation both in the PPI and the CPI. All right, Chinese industrial profit also dropped, all right, as the economy weakened. Okay, so and one of the worst problem, and could be, you know, if it runs out of control, it could cause social unrest, which I pointed out the last time, is the youth unemployment. It continue to increase, right? The unemployment continue to increase, and that's not a good sign for China. All right, the new loan rate plunged to 14-year low. The home prices continue to collapse, and we all know that you know, property prices makes up about 25% of Chinese GDP. So a lot of other industries, right, you know, they depend a lot on the China property. Okay, so at first we had the worries about Evergrande. And then, and after Evergrande, and you know, recent couple of weeks ago, we had Country Garden liquidity crisis spilling over. All right, and that, you know, a lot of analysts are worried that this could be, you know, another giant about to fall. Okay, so China's economic woe will prompt ramp up in measures, and in the last couple of weeks, we saw that the Chinese government were trying to do all they can, but in very small measures, all right? And because the measures are so small, the market got disappointed, and therefore, after every rebound, the market sort of cannot hold the gain and came down. Okay, so little to share about China's July economic performance. All right, like I said, weak domestic demand, external demand has increased the risk of China falling to deflation. Consumer demand is poor, high debts in the economy, all right, because of resultant real interest rate, all right, and that could cause, all right, potential default risk. Okay, so that's not good. All right, consumer demand is down, inventory is high. Okay, property sector, all right, is the gravest concern. All right, so if the property market don't turn up, all right, China will spiral down. All right, so over the past few weeks, confidence in Chinese household property market took another hit. Like I said, news emerged that County Garden, one of the country's biggest developer, missed a bond repayment. All right. So if it fails to make a repayment by early September, so September is a time to watch, which is this month, right? It will be forced into restructuring and default like hundreds of developers. All right, so looks like Evergrande, it looks like this contagion is spreading, all right, which is not good. And then what we saw here is that credit demand in China remained poor, the monthly loan, housing borrowing, all right, that's all going down. And that, will affect the banks, the credit rating of the bank, because there's going to be a lot of defaults coming, all right. And one of the, so the key problem in China now, right, is that it is one that the previous policy approach was slow, all right, and cautious policy support failed to prevent the economy from deteriorating faster. So a lot of economies are calling for some draconian measures, all right, but the Chinese government is not willing to do those. Second, a dangerous feedback process underway, weaker economy feeding into more real estate difficulties and sparking off of financial stress, all right, which then feed back into the real economy. So this is what we call, this is what we usually term as a balance sheet recession, okay? So a company does badly, they do not spend, all right, the debts grow, and so this whole thing cause a repercussion all over, right? So recent development have forced Beijing to unveil some support, and we all know what is it. I won't go through. So there's a greater sense of policy urgency amongst the leader now, which is good, and we hope that they do something about it. Okay, so what should we expect? All right, so we should expect economic stabilizing measure, gradual rate cuts, addressing financial stability risks, boosting consumer demands, and investment focus over consumer spending, crackdowns on capital flight, limited government spending, structural reform, and visiting. So all these things, all right, is going to happen, but whether they are a little too late, too little, remains to be seen. Okay, so Smart Mahkamah have sort of downgrade China's growth from 5.2% to 4.78%. And you could see here that China is no longer a darling to foreign investors. Okay, and a lot of these foreign projects are pulling out of China. Okay, and you could see here that the absolute rate of return on US investment versus China, all right, so the Chinese investment is going down, all right, and that has benefited countries like India, Indonesia, all right. Okay, so China traditional advantage are also not what it once used to be, all right. So it has got massive consumer market was its traditional strength, but now it seems to be also be succumbing, all right. So let's just keep this. Okay, so it's hard to see that with China, right, being like about 25% of the world economy, when China slowed down, they say that if Chinese economy catches a flu, the rest of the world will catch a cold too, right? So, which means that we should expect this Chinese market, Chinese economy downturn to reverberate, right, around the world, especially in Asia, right? Because if Chinese yen keep falling, Chinese economy keep falling, Chinese goods become cheaper, right? The rest of Asia is not going to be competitive, right? So deflation, and you can see that the price of Chinese goods and US stock has fallen every month this year. All right, the Chinese goods, all right, they keep shipping, and a lot of them are shipping out at a loss. Okay, so they're just trying to get rid of their inventory. All right, so and then the world, especially Southeast Asia, we used to depend on Chinese tourists. Right, they come in droves and they spend a lot of money. But today, after the pandemic, a lot of people would expect the Chinese tourists to come out of the country and go into like their usual tourist mode, venturing into the world, but in large numbers. But so far, it has not happened, right? It goes to show that the pandemic, the weak economy has curbed the income in China, all right? And the housing slums are making everybody feeling poorer. Okay, so the currency, all right, so in the past, right, you know, the Chinese government, when they are in their economy is in big trouble, one of the steps they do is that they sort of devalue their currency. So this time they haven't, but the currency is falling, all right, and you know, the currency has been down 5% this year against the US dollar. Okay, and Chinese bonds have been losing their appeal because their currency has been coming down, the interest rate been coming down. Chinese luxury goods, you can see the luxury good index is falling. Okay, so I want to go to the Chinese stocks, all right? So I'm only focusing on DLCs. So this is the DLC seminar, so I only focusing on DLC. So Alibaba, all right, it's a bench or what we call a bellwether of the Chinese market, and also the Hang Seng Index. In fact, it is a bellwether for almost everything. Hang Seng Index, Hang Seng Tech Index, the China market. And if you look at the bigger picture, right, the Bollinger Bands, right? So it's still trapped within the Bollinger Bands. But the good news is that the Bollinger Bands have sort of stabilized. And for the last 1 year, all right, Alibaba did not make new lows. Okay, it is just like you know, going up and down in the range. So that is why I say Alibaba is trapped within a range. So the big picture is that Alibaba is trapped within a range. Okay, so which means uncertainty, long-term uncertainty, which means you should not get into there, right? So if you want to take a long-term position of Alibaba, this is not the time, all right? Because this long consolidation, right, it works both ways, all right? It is a double-edged sword. It cuts, all right? If it breaks out of this range, you know, there could be a rally, which I doubt. But if it breaks down after a long consolidation, right, it could cause a meltdown very quickly, because a long consolidation that failed, right, is always very, very bearish, right? Because a lot of people are already positioning at this level, right? So the big picture, right, of Alibaba doesn't look too good, right? But the short-term picture is on the uptrend. And so see, Alibaba is sitting on this uptrend line. And what you saw here is that range. You see that this range, you are talking about big picture. All right. So let me see what this range is all about. Let me go back again. Okay. So this range, right, it's let me see, about 99? Yeah, 99 and 76. All right. So 99 and 76. So it's trading between 99 and 76. And now it is hovering and supporting along this uptrend line, right? So when this uptrend line breaks, right, it's going to be in trouble, right? So monitor this line, okay? You know, it is trading below the 70-day moving average and above the 200-day, okay? So that's the positive side, okay? Okay, so BYD, all right? So BYD was on a steady uptrend, but what happened was that when, you know, the Tesla started cutting prices, it affected BYD, and then it had a drop, right? But you could see that BYD, right, when it dropped, right, the rebound is always very quick, and the rebound, the magnitude of the rebound is big. So if you can catch BYD bottom, right, normally you can make a lot of money. All right, like the recent round, right, BYD went to 215 and the rebound took it to 250. So 250 is not a buy level, it's got a big resistance there, right? But I want you to be watching my levels, okay? So if it breaks here, it go to 268. If it breaks 250, it go to 268, which is your upside. But in case the market collapse, right? In case the market collapse, right, and it goes to 200, okay, so that is the level I am going to get in. All right, so that is the level that I'm watching. So you have to just be watching. Remember those levels that I talked to you about, because at 200 it's going to do another big bounce. Okay, so buy at a support and sell at the resistance. Okay, so this is the same chart I showed about Hang Seng. All right, I spoke about it, and I won't go through it again. This trade plan works fantastic, all right, for Hang Seng. Okay, so the global indices, all right, in the rebasing chart hasn't changed at all, okay, since the last time we met, okay, and we have Nasdaq as a continued with the top performer, S&P followed by DAX, followed by CAC, and followed by Dow Jones, okay, so the worst performer still Hang Seng. That is why, right, if you want to be bearish, so a lot of people want to be bearish, all right, want to short Nasdaq, want to short Dow Jones, want to short S&P because they are very high. But actually, the easy target, right, is Hang Seng, all right, because it is the weakest index for now, all right. So that is the weakest. So don't short the strong. Always, if you want to short the weak and buy the strong. Okay, but then the word of caution, okay, is that you know, I don't know when this rally is going to end, right? But for the past 15 years, okay, 15 years, all right, if you have been a bear, right, for the last 15 years, this bull market might even outlive you. You know, it may even outlive you, right? It's so long. I mean, how long is it going to go? It could be another 5 more years. We don't know. Nobody knows, right? So the S&P, right, has gained. Can you imagine the S&P has gained 360% versus a 58% increase in MSCI World Index without US stocks, and just 33% for emerging markets. Okay, so this is the longest outperform of US, all right, market in the history that we've ever seen. Okay, so what am I trying to show you, right, in this chart? What I'm trying to say is that, you know, look at this. It has outperformed 15 years. Okay, and the question is, can the US market continue to outperform the world in the next 5 to 10 years? Okay, and also from this picture, or from this you know, scenario, what we saw here, you know, we know that the game of stock market, right, is never fair, right? It's never about valuation, okay? It's never about all that, right? It's all about who controls the money printing machine. So all the biggest funds in the world are in US, all right? And they are in Europe, they are in US. So that's where all the funds of the world lies, and they control the purse string, okay? So, and because they control the purse string, you know, it's easy for them to keep the market up and to flow funds to support their own market. So that's, you know, in the end, it's about politics, all right? It's never about valuation. So if you think the whole market is about valuation, you know, the first market selling is US market because they're totally overvalued. Okay, so let's do a bit of macro. So the last time we spoke, right, remember, we're talking about extreme greed, the market extreme greed, and I was saying that when the market is extreme greed, it will tend to pull back, right? So, and pull back, it did, you know, 5-10% pullback, and now it's at neutral, or which means that at neutral, so meaning to say that in neutral, it can go either way, right? It can go back to greed, it can go back to fear, we don't know. Which means this is now not a time for you, all right, to turn very bullish or very bearish, all right, because it is at neutral. Okay, so what is, so there is many mixed views right now in US. Some people say economy is going to recession, some people say soft landing, some people say All right. So some people say that, can you hear me? Can you guys hear me? Okay. All right. So some people say that, you know, that the US market is going into expansion, and Atlanta Fed is saying that the next quarter, Q3 economy will expand to 5.9%, and that's bullish for the market. All right. So here again, another very bullish forecast for Atlanta. And the job numbers are also showing, all right, job numbers are also showing that the job creation in US is still on track. It doesn't point to recession because there are still a lot of new jobs available. Okay, so that points to tomorrow's, all right, so that points to tomorrow's job numbers. So that will be a big day, okay, for the US market, okay, and I want you to observe that every time when there is a big inflation number, whether it's CPI or, you know, or even like, you know, unemployment data, so those, you know, most times people want to front run the market, right? Because they always think that all these numbers is going to come weaker and it's going to cause the Fed to pivot. So that is always the bet. So if the market will ever have a correction, right, it will be after Friday. So that's why if you have been on a chat group, I've been saying, you know, don't hope for a market correction, okay, until the job figure is out, because everybody is betting on a bad job figure, okay, and then with a bad job figure, the market will find an excuse to rally. Okay, so we don't want to be falling into that trap. So that's what everybody's doing, and they've been doing that over and over again, and these guys have been making money doing that. Okay, so they have been continuing to do that. Okay, so let's watch the job figures tomorrow, and yeah, so even in the earnings part, it's not coming down. The hourly wages is still maintaining. Okay, so what about, so I show you the positive side, right? So what about the headwinds, right? The headwinds is that, you know, the inflation gauge rose 3.2%. Okay, less than expected. Inflation is coming down. All right, core US consumer index, all right, has gone down from 9% all the way to 3.2%. Okay, but it's still, you know, above the targets of the Fed. The Fed is, you know, once the consumer price index to hit 2%, all right? So that's a target. So as long as it doesn't hit 2%, they'll keep interest rate high. Okay, so the core CPI is still high at 4.7%, and for it to hit 2%, it probably takes another 6 months to a year. Okay, so that will mean that inflation will continue to stay up, and also you see that core CPI, right? It's slowing down, but not a lot, right? It's tapering off, right? It's tapering off. The slowdown is tapering off. And the producer price index last month has shown an increase, which is not good. And the Fed chairman in Jackson Hole, right, repeated his determination to keep interest rate high long enough to bring inflation down. All right. And what he's signaling to the market is that November we could have another rate hike. So September, the rate hike is off by consensus, but November we could see a rate hike. So this is why the Treasury yields have hit 5.61% or 3 months. All right, it's very high. Okay, so it's hit, and but then we don't know why the stock market is still not falling. It beats me. All right, 10-year yields are also hitting high, and if you look at the bond trend, right, it's actually broken out of a multi-year trend, which means, right, if we all expect interest rate to fall back to 1%, in the long run, it will not happen. That is precisely my point. All right. So a lot of people are hoping that You know, the reason why they're so bullish today is because they're hoping that we'll go back to the good old days where inflation is low, liquidity is plentiful, the Fed will pivot, interest rate will go to zero again. It's not going to happen, right? Which means, right, from this chart, I will see that the bond, right, from now 4% maximum, right, instead, it will not go down to like sub 1%, right? It will go maybe to about between 2 to 3%. It's going to hold there for a long time, all right? And that's where we will see the pain, all right, coming from the economy. That's where I think that is a time where I think if you're expecting a market crash, that will be the time, because that is what we call stagflation, all right, where we have high interest rate, no growth, and it stays for a long time, and that's the worst for the economy. All right, and a lot of you must be wondering why, right, that you know, the US market is, you know, doing so well despite of all the problems, all right? And it's because money printing again. I mean, you could see that the US Department of Treasury announced, right, that recently that for July to September 2023 and also October, December, right, they are borrowing. From July to September, they're borrowing 1 trillion. October, December, borrowing 852 billion. Okay, so printing in progress. So the money printing will continue. Okay, yeah, and which means that, you know, I don't know how the market is going to come down because they are just printing so much money again. Okay, so so the recent rise in interest rate is leading to further cross asset location valuation, which means that, you know, when you have bond interest going higher, and then you have like equities going also higher, and then you ask, you know, then where should I go? I mean, should I be investing in equities or should I go into bonds because both are giving good returns? So the answer is, for a long time, the bonds and equity has been like going on divergence, right? You know, that, you know, one go, they are negatively correlated. But today is very funny. I mean, I don't know how to explain this. You know, they are all positively correlated. Okay, so that is something that a lot of people cannot explain. All right, and so this is another chart that tells you that today, you know, we have alternative. Not that we don't have alternative, but based on implied yields per unit stock, all right, S&P index, MSCI World Index, and real estate are unattractive. Why? Because stocks are prime example of how the market sentiment can cause valuation to deviate from fundamentals, right? Still with a PE ratio of 20, above 21, all right, S&P is nearly 38 for NASDAQ. Okay, so the PE ratio is 21 for S&P and 38 for NASDAQ. And with that is another point why I'm saying, so that's another point why I'm saying, in the long run, right, because of inflation and because of large borrowing in the next 5 to 10 years, right, the growth will not be equities because of all these structural problems, okay? High debts, high valuation, all right, high inflation, all right? So in the long run, right, you have to think of another way of making money, okay? Putting your investment somewhere else, all right? Stocks in the next 5 to 10 years will almost definitely underperform, okay? So equities, the same thing, all right? I want to go through this. Okay, so Biden, all right, is printing, all right? He needs to finance the war in Ukraine. He needs to finance his what we call inflation induction plan or something like that, giving a lot of incentive for anybody that want to produce or build manufacturing plants in US. He wants to give that incentive. So this costs a lot of money, and they are just printing their way out. Okay, so that's why, you know, the QE will, like, you know, continue in a clandestine way. Okay, so I mean, it's all about US interest rates. So let's talk about US interest rate. So 88.5% respondent expect interest rate to remain unchanged September, but will increase in November. Okay, so this is a trajectory of the projected Fed fund rate. Okay, so what it means is that we are here in August, and then we will start going to November, where we hit about 5.5. And then after November, everyone is now in consensus to project that will be it. Okay, so November is an important date, but already factor in another rate increase. And the question now is, after November, will the rate increase sort of stop? So everybody now, the scenario is, after November, it's going to come down. But what if after November, it doesn't come down, it keeps going up, then that will be collapse. Okay, that will be calamities. Okay, because that is now a new narrative. Okay, Fed Master say another rate hike November, and that is okay. So the thing is that on the back of all this, right? You know, we could see that things are not doing well in U.S. Credit card debts have gone up to about 1 trillion. BOF report find average 401 balance up 10%. All right, more participants are taking hardship withdrawal. Okay, social welfare, they're all going to social welfare. And remember, I talked about, you know, what caused the market to rally. All right, so one very important component, right, or contributing factor, right, to the market rallying and staying up despite all the challenges and the headwind is because of the handout given during the pandemic. But according to this study, right, this handout, right, to the public, all right, were burned through more than 90%, all right. In what's the date here? It says that, okay, so they amassed the wealth, right, in 2020 and 2021, all right. What little remains economy is likely to be gone by September, all right. So by this month, all right, all the excess money will be gone, which means by the end of September, and maybe October, the market may collapse because, you know, liquidity is sucked up from the market. The retailers got no more money to fund the stock market because they already used up all their savings. All right, could be because that is what the study says. Okay, so 10-year mortgage is soaring. Something has to give way. All right, you know, 10 years mortgage, right, has gone almost like above 7% already. All right, and that is the highest, right, since 2002. Okay, so the mortgage application, because interest rate is very high, of course nobody wants to buy property. But here also nobody also wants to sell property, because if you sell, you got to take a new mortgage, which means a higher cost. So nobody wants to sell, nobody wants to buy. So the demand comes down. Okay. So, but what is more worrying, right, in the US market is sooner than rather than later, this bubble is going to burst, and it's already bursting. And we are talking about the office space sector, right? The office, the retail, industrial, right? Because a lot of these places are used for offices. And after the pandemic, you know, less than 70% of people have gone back to office, and that's a structural problem. It will not change, all right? It will not change, right? So which means that you know, this debts, all right, facing this industry will not go away. And all these debts, right, the peak of it is 2020, next year, all right? This year, 24, 25, they need to finance. And when they finance, they need to assume a higher interest rate. And a lot of people will not be able to assume high interest rates, and therefore they'll be selling off their assets, okay, on the market, and therefore it may cause a crash in the property market and defaults on bonds. Okay, let's look at the US, the crude oil. In the last market outlook, I say, hey, you're going to be watching the crude oil because it is now climbing. So according to my chart, right, crude oil can go to as high as 93. It can go to 85 and 93. My last prediction about crude oil came true. all right, when 1 month ago I said crude oil is going to rise, and we all know that when crude oil rise, right, it's always a lagging indicator, which means that the CPI will only reflect the increase in crude oil prices a month later. So crude oil has been rising in July. Excuse me. Crude oil will be rising in July, and it should be reflected, all right, in the CPI, US CPI, either in this month or the month after. All right, so which means that inflation, if crude oil run out of control, when it goes to 93, then I think all bets are off for inflation. Okay, so the dollar index very important, and from this chart, the dollar index could have peaked, and I believe it's coming down. And if the dollar comes down, it will cause inflation to rise further. Commodity prices will go up. Okay, so here is the prime time. Okay, that's where I think everyone is looking for. So I have like talk about the macro. So let's go to the technicals. So where are we on the charts? All right. Okay, so I want to talk about what I predicted on 28, and I also shared my proprietary technical analysis strategy, and the strategy really, all right. So this strategy is only used, right, to project long-term targets, right? They are not for intraday trading or weekly trading, the kind of thing. They are not, right? So this strategy is very good, right, to find the top and the bottom. I have been using in my last 30 years. I taught them in courses, and a lot of people have benefited from it. So macro pictures are fantastic. All right. So you could see that, all right, when this strategy works, right, it always, can detect the peaks, all right, and the troughs. So the troughs and the peaks. And recently, I was predicting that because it hits this, and S&P will peak at 4,600, and that's what it did. I mean, it peaked, and then when S&P peak at 4,600, right? I mean, I always give. So a lot of people will talk about market crash and all that, but nobody wants to give a level. So I'm the only guy in the industry, right, or maybe in the world, right, that gives you a level where it peaks, and I'll tell you the level where it bottoms. All right. So I always do that, all right, because of my strategy I've seen it working for the last 30 years, and there's no reason why this thing stopped working. Okay, so I've predicted the last 3 market crash in US, which is very rare, but I predicted them, and I'm using this method again to predict the S&P. And I said the S&P, after it hit 4,006, right, it will go to 4,350, and we go to 4,350. It's time to buy because it's going to bounce. All right, until it breaks. Then okay, so what you see on this chart, right, is something very important. Because, right, what you have here in S&P is a projection of 250.4, all right, from the top to the next line, right, the top channel to this middle channel. But if 4,350 breaks, which means this line breaks, all right, you could see, right, the next support, right, is very far away. It's much further away than the first one. All right, maybe about, instead of 250 points, maybe 400 points. All right, and so that's a deep one. Okay, so this is something that I want you to be watching for, because this is where it will cause some concern of the deep fall. Okay, so S&P, you could see, right, hits right there at 4,350 and rebounded. All right, same chart that I draw, I just reproduce it today to show you that how it works. Okay, and Dow Jones, right, I predicted that it will hit 35,645, which is on that day, right, that we talk about 28 July. I say this is the day Dow Jones topped, all right, and I drew it there. I said, okay, top already. Go back and short it. All right. So there were 200 people listening to me on this. All right. So when the market is very bullish, right, most people will not say go and short it. Most people will say go and buy, carry on buying, right? But I say, hey, this is time to short it. All right. Why? Again, the proprietary trading. I'll show you how. All right. All these lines are drawn. All right. And I said, okay, you hit there, and it will go to first stop. If it breaks the first stop at 3,450, it goes to 34,000. All right. So did it go there? It went exactly there. All right. So it went to 34,000. All right. And now it has rebounded all the way back to the halfway mark. So if you don't follow the plan, right, you know, you will, if you short here, you probably lost half your gains back already. And that's not good. All right. So you got to follow the plans very closely. All right. So the question is, how do I get it? All right. So I promised to share the secret to you, and that's where today I want to share a secret to you. All right. All right. So if you want to understand long-term trends, you must have long-term chart. All right. So you cannot have a chart that only like 2-3 years. You must have very long-term charts. All right. So this long-term chart is showing, all right, that these trend lines here are very reliable, because they are, you see that they are hitting so many areas, and every time, right, you know, from 90% of the time when it hits these levels, you always make money. You always make big money, not small money. All right, which means, right, that if you just follow the plan, every time it hits the level, you just do the sell. Every time it hits the support, you just do the buy. All right, you will have able to make a lot of money if you follow this strategy. Okay, so that is Dow Jones. Okay, so NASDAQ, I talked about in the last, I didn't have time to draw the NASDAQ chart, but this is the last one I showed you in the last 28 July. I talked about 5,000 point run, and the 5,000 point run in history, right, has proven to be exhaustion, right? So every time you run 5,000, it's a drop. So you run 5,000, I say it'll drop, and true enough, it dropped, all right? It corrected, okay? So I said that, okay, it's going to correct, and it did on 28. All right, so you could see that on 28, right, Dow was at 15,800. It went all the way to 15,557. All right, so it was like more than 1,300.4. All right, and then it rebounded to where it is today. Okay, so I want to bring you to what's the time now, Mike? I'm talking for 1 hour already. Should be stopping now. So this is the NVIDIA. Okay, so NVIDIA, right? So we all know that this is a AI rally. Okay, we all know it's AI rally, right? And the leader of the AI rally is NVIDIA, and which means that you have to understand why NVIDIA is going up. So a lot of people are saying, oh, you know, it's gone up too high, you know, it's we need to sell it. It's a lot of hype, you know, overvalue and things like that. So, but then if you take a closer look at NVIDIA, right, you know, their earnings are really solid, you know, really solid. It's got fundamental one. It's not like, you know, hype like those GameStop kind of thing, AMC, GameStop, you know, people just ram the stock up. So this one got some fundamental behind. All right. So let me just tell you why. Right. So the revenue surged 13.5 billion, all right, in the second quarter, which is up 101% over the prior year. Their revenue projection for the next quarter is 16 billion, and that would be another 170% year-on-year increase. So you see this projection here, this dark blue, that will be NVIDIA's jump, which is what the CEO has predicted. So NVIDIA net income hit a record 6.2 billion in Q2, which is 9 times higher than a year ago. All right. So in Chinese, we saw Ki Xiao already. This thing, whole thing Ki Xiao already. How the thing can jump profit so many times, right? So the market is also responding to these big numbers. So people are saying, you know, could we be in a new age of AI? Nobody realized it. And AI is just now, you know, coming along, breaking into the market. It's time to get in. So the gross profit margin has moved above 70% for the first time in the history. See that? All right, NVIDIA net income jumped. All right, 70%. All right, you see that? The gross margin jumped 70%. Okay, yeah. And the income jumped 9 times. Okay, so let's compare NVIDIA fundamentals, right, with all the big techs. So if you look at NVIDIA revenue growth, right? NVIDIA actually grew 100%. You know, the reason why the market is so bullish because it is growing by 100%. Tesla, 47%. That's why Tesla has always been one of the best performing stock, although the prices are very high. Then followed by Facebook, 11. So the rest that follow behind are all single digit. So that is why, you know, if you have to be bullish, right, in tech stocks, right, it will be NVIDIA, Tesla. Because they fundamentally are some of the best buy. Okay, and if you look at the PE to price, all right, so the PE ratio is naturally high because 100%. So every year is going to halve. Okay, so Amazon, Tesla, these are all, you know, they are good because their PE is high because everybody buys it because they're projecting greater revenues. All right, sales price to sales ratio, of course, also high because their sales is coming in, you know, faster than anticipated. So the big question is, will NVIDIA be able to grow these lofty expectations? Okay, so that is the question. And I think in the next quarter, you'll continue to perform like the company projects. So which means that this whole AI rally, right, you know, don't be too sure that it's over. Yeah, you know, don't be too sure because the results are really, really good. All right, NVIDIA. Okay, but a word of caution, right? So this market is very lopsided, right? So all the techs, the big techs are moving, NVIDIA, Tesla, Facebook, Microsoft, Google, they're all moving. And they make up like maybe 50-60% of the market gains. But if you look at the small cap index, right, Russell, it's still very bad, underwater. Which means, right, the small boys are not following the big boys. The small boys are saying that, I'm not into it because, we don't think that, or the investor don't think that, the small cap is ready to run. So that is something that, behind your mind, you must know that it's not a broad front rally, all right? So if the market collapse, it can also collapse very fast. Okay, STI, all right? So prediction came through, all right? We hit the top. So you look at STI, right? Very predictable one, right? So if you trade STI, never believe STI will go one straight line up. Because in the last 30, 40 years, right, STI has just been ranging up and down, all right? And it's still below the 2008 low. Can you believe it? High. It's still below that, all right? So STI is a very forgotten index. And the reason why STI is a very forgotten index is because we only have a couple of stocks in the MSCI index. And that's why it is not on the radar of the big fund managers. Okay, so it goes up and down and just trade the range. All right, so STI was the peak here. That was where the time to short the banks, and now it hit the support. So it's time to short cover. All right, it can go a little bit higher, maybe go back here again or somewhere in the middle. All right, but it is trading in range, it's trading at the bottom. All right, so DBS also trading with a range. So watch the orange lines. All right, so just yesterday, today it hits the orange line, which is like 32, 33.2. So it used to be trading this range, 31.8, 32. So not very exciting. All right, but like I said, right, trade the banks only during the earnings season. All right, earnings season, you see that, wow, every time chong one. All right, then it come down. All right, after the earnings season, it seems the performance sort of be muted, but what I do is I'll encourage you only trade banks at the support levels. Okay, don't buy in the middle. All right, like so. Once the next support level 31.8, 31.8, you can get some good, go for a rebound. Maybe 33, get out of it. All right, or when it hits the upper end of the channel line, that's the time to sell it. All right, so UOB, right, you can see that the downtrend is very pronounced. All right, the macro trend is down, it's not up. All right, you can see the two orange lines, the macro trend is down. Okay, and it is like trading below the 200-day moving average. And you can see that this range is trading 27.9 and 28.5 and trading within the range, and which means that this could be a sell level. You may pull back again. Okay, so today I have a stock for you. It's called SIA. All right, and I'm bearish on SIA. All right, and you can see the SIA chart, right? It has gone up, and we all know why SIA is going up, right? Because they give a lot of freebies, they improve a lot of their services, all right. And then SIA was the first airline, one of the first airline that opened up, and therefore it received a floodgate of orders, all right. And the air ticket price of air ticket shot through the roof. Cathay Pacific was down. A lot of airlines were down. The Chinese airlines were down. SIA in Asia was predominantly the only one operating, and therefore they benefited from it. But now everything is open. Okay, China open already. Everything is open. Cathay Pacific is flying. So in the next couple of quarters, right, you can see that SIA, right, their revenues will be creamed. Okay, and we all know, right, that traditionally, right, airline business is a cutthroat business. Actually, it's a money-losing business. But because of this special effect of the pandemic, right, this becomes now a very small window for a good outperformance. And it's happened already. All right. So which means, right, going forward in the next 1 year, everybody's catching up, more airlines will be open. And then if we have Chinese tourists going out of China in a vengeance, well, it's good for SIA, could probably last a little longer, but Chinese people are getting poorer. The tourists are now coming out. So I think I'm bearish on SIA, and I think that so the SIA, right, if it can go to 7.12, it'll be good level to short, because that's a very big resistance there. But otherwise, right, by and large, I will expect it to hit 640, right, and eventually 580. Okay, so last time is 711. Okay, so SIA, I'm bearish, all right, fundamentally and also technically. And okay, so that's the end of my presentation. So if you have not been in the RHO chat group, it's very exciting. RHO DLC chat group. Every day I give you my HSI trade plan, and most times you'll see people right, saying, oh, they made money, they had a free lunch or free dinner that day. Yeah, what I mean. So that's good, right? So know how to follow. So every day on the HSI trade plan, right, I will give what is the expected high, what is the expected low. So if the market hits the expected high, so that is the time to short the market intraday. So it's an intraday trade plan. So the market hit the low, it's it's time to buy it. Okay. Yeah. So today we had a low, and we so the market went to, like, when the market opened, right, HSI went to as high as today when the market opened, HSI went to as high as 18,600. All right, and then I predicted it will go down to 18,300. It was like 12 points away from 18,300. So for those who have shorted, you would have made some quite good money. Okay. So what's this? Okay, so this is a Hang Seng. Yeah. So if you so this is the trade plan for example, right? So this is the trade plan for 14 July. And I said that support level 370, resistance 570. So it didn't go up to 570, but when it hit 370, you saw the rebound, right? It went exactly at 470 and it rebounded. Okay, so that is my years. So how do I do it? All right, I get it right most of the time, right? Not all the time. I get it right most of the time. How do I do it? 30 years of trading intraday. All right, Hang Seng Index. Okay, I probably pay like more than $1 million on tuition fees, all right, conservatively on trading Hang Seng. Okay, so that is the Hang Seng DLC. If you want to be looking for day trading. Okay. So this 5 times, that is 5 times short. This is 5 times long, right? So if you're bullish, is buy the long. If you're bearish, you buy short. Okay. So receive market moving alerts. Okay. So sometimes we talk about DLC stocks. All right. So we talk about every day we talk about HSI day trading. And then we talk about stocks. Here we talk about Sembawang Corp. All right. Hitting a high from 555 to a low of 550, and you could make like 10%. All right. And then so these are the key levels that we talk about. All right. So another example of the key levels. All right. And we talk about, so here, so I talk about support at 18,430, hits that, and then it rebounded. Okay. Okay. So these are the, okay. So if you are new to the group and you want to join our DLC chat group, all you need to do is just scan the QR code, okay, and it'll bring you to the steps. All right. So if you still cannot do it, don't know how to do it, you can call us. All right. So, but then first you need to fill up an online form. I mean, that's because of some PTBA issues. All right. We need to fill out some forms. All right. So these are the steps. All right. First, you fill out the online forms, click submit. All right. And then after submitting, you go through terms and conditions, disclaimers. This is something that we need to do, no choice. All right. And then you can also, go ahead and click join trading community if you want to join my trading community. All right, which I have another chat group. Okay, that talks everything under the sun. Okay, so you can join Robin's trading community by just going to the chat group. All right, if you're interested in the course, you can just register your interest. And I can teach you my proprietary trading strategy. All right, Facebook group. I think a lot of you are inside there already. RHO trading community. All right, it's free. If you're not in it, you can perhaps join it. If everything else fails, telephone number, email. Okay, so you don't know about you don't know how to do those things that I tell you. All right, so this is the telephone and our email. Just call us, and we'll get Union, Juren. So we are partners. All right, Union, Juren. We are all partners in this business, and we'll get back right to you. Okay. So so do you guys have any questions? If there are no questions, all right, let me just see the chat group. There's any questions?
I answered most of them. Yeah,
you answered most of them. Okay.
I think
there's no more questions, huh?
Go back to the give them some time to scan the QR code for those.
Okay, so go back to the QR code, is it? Okay.
I'll leave it there. Give them some time to scan.
Okay, I go back to the QR code. Okay, here you go. So please spend some time. If you haven't scanned the QR code, please scan it. Otherwise, it will be a good night until I see you next month at the next DLC talk again. I wish you a good presidential voting tomorrow. Okay, and also a fantastic weekend ahead. Thank you, guys. Bye.